Well, good afternoon. Good afternoon and welcome to another of our Webinar Wednesdays hosted by CSU Bakersfield Small Business Development Center. Good afternoon. I'm Kelly Bearden, and it's a pleasure to be here today. Even without my virtual background, my wonderful green screen, it is a pleasure to be here today. I am excited. We got a lot going on in business news and how it's going to impact your business moving forward. A lot of economic news, a lot of capital news, a lot of stuff that shit is going on. So got a lot of things to catch up on. It's been a couple months since I've been here by myself, so I'm a little lonely, sure, but what we're going to do is we're going to get caught up on a lot of these things that have been kind of hanging out there. So kind of a large grab bag full of good topics to go through today. We're going to talk about the Fed hike that happened earlier this morning, a lot of things and how it's going to impact your businesses. So let's get going. Okay, so here we go. What's up today, June 15th, 2022? Well, we have an increase in the discount rate as the Federal Reserve Board actually increased by 0.75%, 75 basis points, almost an entire 1%. Now, the Fed had talked about a lot of the increases through this year. There's several of them, but they were looking at probably a half a point at a time. So why did the Fed raise 3/4 of a point, kind of contrary to what they had been thinking, what they had been saying? My opinion would be that it was kind of a necessary response to the devastation in the stock market. Also, continued economic news on inflation continuing on. So this Fed hike, which is the largest since 1994, increases interest rates by 0.75%. So how does that affect borrowers? We'll talk a little bit about how it's going to affect borrowers and what they need to know. And of course, it's going to affect the loans that are mostly variable by nature. Fixed rate funding, this is why you have it if you can get it. Fixed rate funds are tied. They are not going to increase. However, so many of the different programs that we have out there, including SBA funding, are variable by nature, many of those loans. Not all, many of them. So what does it mean to borrowers? We'll take a little look at that. And we continue to have the economy dominate our business outlook and news. We'll look at various aspects of how the economy is doing that and look at a little bit on inflation, but we're going to give inflation a break and kind of look at who is saying what on recession and some of the things that could be going on there. So we're going to continue to look at that aspect, but also the IRS raised the mileage rate. The mileage rate for the mileage from 58.5 cents to 62.5 cents. It's not totally uncharacteristic for them to do that mid-year, but it is unusual. And it really reflects one of the highest components of that mile rate. And the mileage rate is basically, and that's the cost of fuel. So obviously there's other factors that go into that. And there are ways that you can do the mileage rate. You can do actual expenses for tax purposes. You can do actually the mileage rate of 62.5 cents per mile you drive. So what goes into that 62.5%? It's basically all the components that make up the actual deduction if you take that instead from the IRS. So that could be a number of things. It could be your depreciation for the vehicle. So you purchased it for $40,000 and you're writing it off over 4 years, if you can. Just for my example, you get your $10,000 a year actual deduction. So depreciation factors in, the cost of insurance figures in, maintenance and other aspects. So fuel is a component of it. It's a very large component of it as we see gas prices going where they are now. But it is really kind of interesting that the IRS would raise the business mileage mid-year, and it is pretty much driven by that fuel component. Now, we probably won't get into the time aspect today. and take that necessary time to look at what is best for your business, either taking the actual standard mileage rate of 62.5 cents or your actual expenditures. It's going to pretty much depend on each individual. So for those of you that operate a fleet, you might have many businesses, business vehicles, or you only operate one vehicle for your business. And it's going to depend on those factors. So those are oftentimes questions left best for your own particular tax situation and your financial advisor, accountant, or CPA. So we're going to also look at a little bit of the recession threat that is out there. Great variety and information and forecasts that are coming out now. You have individuals who say we're already in a recession, to those that say there's only a 1 in 3 chance. And so we're going to look at what people are saying is about this recession risk and this recession threat, and also look into other aspects that are out there that might affect small businesses with recession. There could even be something positive, who knows, that happens out of a recession threat. Typically, when I look back at recessions, it seems like government does good in recession, at least in some aspects, but it's generally your more wealthier individuals who can ride out a recession, who can purchase assets for limited amounts of pennies on the dollar. And we saw a lot of that during our last major recession back from 2007 through 2009. And of course, when the recession ends in 2009, the lingering effects, you might be past the actual economic downturn, because a recession is essentially 2 quarters of where your gross domestic product falls. So the addition of all the sum of all the goods and services that are produced in the economy, our gross domestic product, if that falls in 2 successive quarters, that is the definition of recession. So, the lingering effect of that can go on for extended period of times afterwards, and really did in the last recession. Recessions can be short or they can be long. There's so many different variables to that we'll talk more about recession today. We'll give a quick update on the relief programs, as our relief programs are pretty much gone away. And whereas we did have a recession during the beginning phase of the pandemic in the first 2 quarters of from March of 2020, and we did receive pretty much, one way of putting it is a government bailout. So we received significant funds for small businesses. We're not going to have that during this recession. We didn't have it during the last recession. So really, it's incumbent on small businesses to go back and to see what they worked and learned from. And not all businesses are going to be affected by recession. 4 out of 5, so that's a significant amount. Generally, the 80% rule kicks in on recession. But there are some that prosper and some that do well, and some that are able to ride out the recession better than others if there is a recession. So along with our update on some of the relief programs, we'll also look at our state small business credit initiative and look at the funding that's going to be coming from that. We'll look at some of the capital aspects that maybe happened with recession. And as always, we'll take your questions and have a very modest poll today. So let's do that. Let's go to the poll. And, just to get a gauge of where people really want to, where do we want to spend a lot of our time today? So let's first ask, what is today's interest rate effect going to have on your business? So today, the Federal Reserve raised the discount rate. Is it going to have a significant, moderate, or no effect whatsoever? So is it going to be a big difference or somewhat big difference? Is it going to be, it's going to affect the interest rate hike, and not at all. So in addition to the interest rate hike is designed to slow down the economy, and that is to slow down spending, which hopefully will have an effect on inflation. So that is kind of what is behind it. If you have a retail business, for example, that spending could be impacted by as individuals spend less money because they are actually paying more for their cost of capital. Okay, so we do have 68% of you that have participated. I appreciate that. Our question, first poll question of the day, is today's interest rate hike of 0.75% will affect my business either significantly, moderately, or not at all. Let's end that particular question and let's share the results that are very close. And most of you feel it'll have a moderate effect, 38% of you, while as 31% of you think it could be significant. So almost 7 in 10 of you are saying, yes, it'll have a moderate or significant, while 31% of you won't have any effect at all. So maybe not have any effect on you on the payment wise, the payment of interest being you have fixed rate funding, but there could definitely be a slowdown in spending that could affect your business. Okay, so thank you for participating in poll question number 1. Let's go to our second poll today. And the second poll just kind of is something we've asked before. What is your biggest economic fear here on June 15th, 2022? Is it inflation? Is it recession? Is it more interest rate hikes? Or is it something else? Is there another economic fear that you have? Maybe it is maybe it's the supply chain that is indirectly tied to some other things. Maybe it's the trade deficit. If so, just go to the chat box and use the chat box, and we'll go there and we'll look and see what is happening. So what is your single most economic fear at this time? We have 68% of you in. We'll give you another couple of moments to get in and answer. Is it inflation, recession, interest rate hikes? And that would be future interest rate hikes. The Fed has mentioned that they were going to probably increase rates in 2022 about 3% to 3.5%. So could it be some more of those hikes that are coming? Or if you have another fear, let it be known. Okay, so ending that particular poll, recession is the biggest fear that you have right now with 47% of you. 40% of you are concerned about inflation, and another 7% about the interest rate hikes that could still come. And also we have others as well. So thank you. And we will get to that chat box and find out what those others are in just a little bit. But thank you for actually participating in the polls for today. Always good information from our audience. And before we get going too much farther, just kind of a feature that we used to do here on Webinar Wednesday was to kind of keep you appraised of what we had in our on-demand YouTube, our YouTube channel. So some of the recent topics that we won't be talking about so much today, but last week we talked a lot about the California Dream Fund. And we'll probably share even more updates with you in the next coming weeks on the California Dream Fund, but really a good presentation of where we are right now on the Dream Fund. You can go to our June 8th webinar on May 18th. We had an update on California law and also human resources from Celestian Ramos. And we had an economic update about a month ago from Dr. Mark Evans. And cybersecurity, really a lot going on still with cybersecurity. So good updates if you want to go back and kind of catch up on some of those that you might have missed in the past. So that's those. It's kind of our status and action for key, relief programs that are still going on. The California Dream Fund program, it's, I believe, taking individuals on a wait list basis. You can contact SBDC at csub.edu, and we will start facilitating you to that particular list and trying to get you into one of the training programs that are coming up. Is we have one completed, another one that's going to be completed soon, and we have multiple more that'll be going on later this year. So if you're interested in becoming more information on the California Dream Fund, go check out the video from last week, but also send us an email interest. A lot going on right now in the state small business credit initiative. And this is the program with $10 billion. And I'm really hoping that one of the most unique programs that help businesses in a recession could be a benefactor of this program later this year. I'm going to be lobbying for it. I'm doing it right now. And that is going to be a line of credit or a credit line. So credit lines are really one of the best tools that small businesses can have to weather themselves through a particular recession. And we'll be seeing if some of those are coming online with some of the other programs. Our Kern County MicroGrant program, which is funded through the state of California GoBiz Office of Small Business, is open, and there's time to get your application in and money. We'll talk briefly about that, as is also the Mono County Grant and Forgivable Loan Program. It is open, and you can see one of the Jeffs in Mono County being Jeff Simpson or Jeff Russell, and they will assist you, or excuse me, Jeff Lucas. You can see Jeff Russell too, but you're going to have to make a retail purchase to do that. Also the EIDL loan. Jeff Russell, of course, being the proprietor at Ridge Marino in Mammoth Lakes, a wonderful shop. Check it out online. EIDL loan is closed for increases in considerations, but still with the EIDL loan, which is, I think, just going to be one of the more valuable tools if you have an EIDL loan to weather and to ensure your survival through a potential recession, if it happens, would be that EIDL loan. And we'll talk a little bit about that. Again, with the EIDL loan, you need to allocate the loan and spend it over a 30-month period of time. You don't have to make corresponding withdrawals from wherever your EIDL went as far as a bank account, but you need to account how it was used, and it was used for a allowable expenditure. The employee retention credit remains open retroactively through periods through 2021, being through the third quarter. And then other programs, the last two are closed at this time, although the California Grant Program is still funding through Lendistry.com. And it's kind of unique where that program has been closed for several months, but still they are trying to get the last remaining dollars out to those businesses that are looking for it. So we talked about the Kern County MicroGrant program that's gone through quite a few changes. It's here to assist our smallest, our neediest, and maybe some of our left behind smallest micro businesses. If you had sales of less than 50,000, if you please look at the application. If you apply or you know somebody who can apply for these funds, it's great. It is scrutinized. It does have eligibility requirements. And if you do not meet those eligibility requirements to the T, you will not get this particular grant. So if you need any application support, to help with your documentation and pull this loan application together. Also, micro businesses, I really think it's a great opportunity to look at the bigger picture on how this could fit into growing your micro business. And oftentimes it's us finding those micro businesses out there, because $50,000 of revenue or less in 2019 is not a very big business. And you can call our office for more information on the Kern County MicroGrant program. So lots of coming up on this. We talked just a little bit about it, and I'm hoping the state small business, program comes up with some type of credit line that is going to not only help businesses grow, but help people in the event of a recession that we're going through. This was funded to the tune nationwide of about $10 billion through the American Rescue Plan Act of 2021. So it is designed to provide more small business lending programs for those that generally have a harder access to potential capital programs. In California, we'll be going back and forth through the California Pollution Control Authority and a program they have at the California Capital Access Program, which is a program that's been around for about 10 years. And we'll get into that in detail in coming weeks on this particular program. And also the iBank, the infrastructure bank of the California Office of the Small Business Advocate, has a small business loan program. We're also hoping that there's some capital that is going to be deployed to social and economically disadvantaged small businesses. So also, a couple of weeks ago, we had a great presentation by Mr. James Jim Thompson, who talked a little bit about how his crowdfunding platform. I just kind of wanted to let you see where Kickstarter fit. We still believe that there is great opportunity to crowdfund more and to crowdfund different types of businesses, and that it is an underutilized program as far as accessing capital. So on our capital quarter today, we're going to look a little bit about a nice little cheat sheet here provided from Crowdfunding Better. So our friends at Crowdfunding Better kind of show you, and I can even increase this a little bit bigger maybe, or not. But also what it does is it shows you the different types of program at the very top. So when we looked at Jim Thompson's Kickstarter program in detail, you'll look and you'll notice that it is right here, down here. If you follow my cursor toward the middle right there, Kickstarter is one of the rewards-based programs where generally the people that contribute to the campaign are paid in some form of reward. It can be an intrinsic reward. It can be a product. It can be all different types. So you'll see all the different platforms that are available, and there are literally even more than this that go on and on about crowdfunding platforms for rewards. But also there's a type of crowdfunding called donation. And I think most people are familiar with GoFundMe accounts where there might be a charitable cause, a hard luck story, really something, but you'll see that there are literally dozens right here, even on this one page, of examples of platforms in the donation space. So we have donation, and we have a number of different spaces. We have rewards that we went into in much greater detail a couple of weeks ago. We also have investment. Investment crowdfunding is also called equity crowdfunding. And it really gives individuals the opportunity to purchase stakes in small companies. So with this particularly, exciting particular platform, the investment or actually equity ownership allows you to buy money through a individual, through a business, through a retirement program. You need to do the due diligence on the particular businesses. You need to see what's out there. But really, if you're saying, gee, my small business capital fund has lost 20% in the last year, I could do better myself. There's the opportunity for you if you're so willing to think that you can bet on small businesses better than some of those other professionals. So some of the investment opportunities, it gives you the opportunity to get in on some really small businesses and to really invest in them and give you the opportunity that oftentimes businesses and individuals and retirement opportunities really have never had. So there's other programs such as lending, whereas crowdfunding lending is where generally individuals come together or organizations. One of the more promising examples of this is Kiva. And Kiva is kind of where they take a lot of individuals who actually contribute to the fund and actually lend it out. So also we're looking at intrastate and DPO. Direct public offering is the DPO. And so these are other oftentimes, and it pretty much depends on the state there, where again, the backers are going to be investors. And they can be equity, debt, or revenue share investors. So really kind of some unique opportunities and some really great chances for you to move forward and to do stuff with crowdfunding, and just kind of an opportunity here to show you what is out there in addition to other things than just the Kickstarter and the rewards-based sites that we looked at last time. So also want to catch up a little bit on marketing and the marketing maze. We have our economy corner, our capital corridor. Now we have marketing maze. And so next week we have a great program. We have special guest Melissa Forziat, and she's a marketing specialist, a nationwide presenter on a lot of the marketing trends of small business. So do join us next week for the marketing. You'll see, maybe you'll have some questions for after today on some of the marketing that you can do if an economic downturn is coming, or any digital suggestions for economic issues with recession or an economic downturn. So we'll see about that last week. And then also one other thing is we, many weeks ago when we had Tiffany Phillips, so probably about 6 months ago, actually, gave an excellent program on digital marketing. She talked about Googling my business. And I really thought it was outstanding from the standpoint that really so many people do not Google your business, and there isn't a lot going on in that particular space. So one thing I wanted to do is just to bring you up and show you, if you Google our business, which is the CSU SBDC, the California State University Bakersfield Small Business Development Center, there pops up Google our business. And we do have 5 Google reviews. Feel free, if you appreciate, if we've been able to help your business, go in there and leave a review. We encourage you to do so. If you haven't had the greatest experience, I would hope you'd reach out to me directly, let me know, and I can resolve that. But if you feel it's necessary to do it in that space too, that's the beauty of social networking, I guess, and digital networking. So there's kind of our structure, our physical location. So there's our Googling our business. And really, if you haven't done anything on Googling your business, you're going to want to at least take ownership of it. Under here where it says own this business ? And you're going to want to take ownership of that. And being a nonprofit, it's harder. You'll see when you do Google our business, you'll see the on-demand webinars that we talked about come up, and then some of the other programs and some of the other things that are available. But just wanted to kind of close the book on this. It could even be talked about next week during next week's presentation. So if you haven't had a chance to own and Google your business, take the ownership position, there's your opportunity right there. Okay, moving back to our PowerPoint and moving right along. Let's look at some of the economic corner for today. And we're starting to see where growth has slowed. Growth has slowed significantly. And that'll be kind of, it depends on how much it slows if we end up in recession or not. Also, you will see that our small business optimism is at an all-time low. Now, as small business owners, why is it important that we're optimistic? Well, the reason is that businesses that feel good about their future in the near and longer term are more likely to invest in their particular business. They're more likely to, which helps the economy, of course. So those that are feeling good about the business, and feeling good about where they're headed and the period of time coming up, it's always good from that standpoint. And kind of the relevant factor for another huge segment of the economy is consumer confidence. So how confident consumers are is important as well. And we saw where actual retail sales were down this week, a really key economic stat, because consumer confidence is important, because if consumers continue to spend, and we saw that during the pandemic with a lot of the pandemic relief programs, including actually rebates to individuals, and with consumer confidence, it is now fading. So we're seeing that happen on the economic side of things that we're just going to touch on briefly today. Interest rates, of course, we said that with the rise, and also again, the higher interest rates constrict capital and growth, and a lot more on our economic corner, where we get very specifically today into kind of interest rates and what interest rates are going to be doing. Now, we don't see going all the way over here, and thanks to the St. Louis Federal Reserve for this chart, but you'll see right here where we're going to start seeing this pattern go up from the very far right, and we're going to start seeing interest rates now that are going to be up in this range as we move forward. So, but as we look at the history of rates and going back over time, we see obviously rates were raised significantly during the last period of high inflation, and that being pretty much the 70s and 80s. So hopefully we get this thing corralled before we get anywhere near that. But also, high interest rates are very tough, mostly very hard on salaried and actual employees, and also those are on fixed incomes, being the retired individuals. So those are the ones that get hardest hit, as oftentimes wage and salary increases do not keep up with inflation. And also for, entitlement programs such as Social Security, they don't remain as well. So what are some of our risks from interest rates moving forward? And your biggest risk is going to come from the variable loans. If your fixed loan, like say, maybe your idle was a fixed loan at 3.75% for 30 years. Oh, that's going to be cheap money. So, but most of your SBA loans, or most of your guaranteed SBA loans, your 7A loans, are variable loans, to where both a bank portion and oftentimes the lender portion is actually a variable loan. And so it will move in concert with the discount rate and the prime rate. So you have a discount rate increase today, you have a prime rate that's going to be increasing soon, and the interest rate, it will rise accordingly. Many fintech products, which really don't measure by an interest rate, they measure by an actual percentage, could be affected by rate increases. Lines of credit are oftentimes a product that is oftentimes subject to interest rate risk, being a variable loan in most cases. Most business credit card balances are variable by nature and tied, and so they go up. And also some auto, home, and mortgage products, along with many personal loans. So those are all things that are variable interest rates that can be affected as we move forward. So one thing, as we get into a discussion on recession, that I think is important is to see, I'm a big believer in seeing what happened last time. The past can, dictate what happens in the future. And so I thought there was an excellent piece that was done by the Harvard Business Review after the last recession from 2007 and 2009. And so what they did was they looked at some of the firm characteristics of companies that weathered the downturn successfully. And they focused on 3 areas, and one of them was they acted early. That is why we're here today. We're here giving you the opportunity to, see what you can do now, or what you can maybe get into place. Maybe you won't need it, but maybe you will. So you hear me talk a lot about the key leadership characteristics that small business owners need. And really, owners that act early, those leaders, they understand and they're reluctant to the changes that are happening. And they're proactive and they recognize the threat that potentially is coming. So oftentimes, those businesses, if they're bigger, they have earnings calls that can actually come into effect. But those businesses, they get a plan in place, they act early, and they are prepared for economic downfall or economic downturns, I should say, rather than just shooting and trying to shoot from the hip and act on the fly. So another thing that they do other than act early is they take a long-term perspective. I think that is really important because oftentimes we see something happening with inflation, we see something in recession, we see some other economic trends that are happening, and we tend to look at the short term. We tend to think, how is that going to affect our profitability in 2022? How is that going to affect me in being able to hire more people and change my business and kind of work my business model and my business plan? So taking a longer term perspective, though, is really something that might be an ideal preferred path to go. So looking at a longer term path, what you might want to do is to look at the long-term picture and look at some of the positive things that can come out of it as you look at maybe a 2 and 3 year path rather than just something for 2022, first quarter 2023. And the other thing I think that is important is they had a tendency to focus on growth. So whereas I think at times we just talk about cost cutting and budgeting, things that I know you don't like hearing. Cash flow forecasting. Come on, I love cash flow forecasting. I think it's vital. But also focusing on growth is something that is vitally important. To be able to focus on growth and to look beyond is really something that I think companies need to take a balanced approach to weathering a downturn successfully. And really, kind of that could even also be opportunities. So when we look at kind of opportunities that might be out there, and I'm going to go right here first, and I'm going to look at some of these opportunities. So one of the things that surviving, I'm going to go right here to number 3, my third bullet. I'm jumping ahead. And I think really that last growth button, that last growth was right there, is to grow possibly through acquisition. I think that there's an opportunity as some businesses that are not prepared and have concerns and have maybe owners that are nearing retirement age that want to sell. It's an opportunity for businesses to find a fit and to grow through a particular acquisition. It could be adding not only market share, but it can be adding geographic location. It could be adding key employees. It can be adding certain aspects, whereas you take a business that is maybe doing so well during the recession, but you add them to your business and you're able to actually make both businesses stronger through that particular acquisition. So don't be afraid to look at opportunities moving through a economic downturn. And one of those is to fund an opportunity through acquisition. So is a recession going to happen? First and foremost, what are people saying? Well, Dr. Mark Evans, emeritus professor at California State University, obviously a gentleman that I have tremendous respect for with his opinion. He seemed to think that a recession was imminent in the next 6 to 12 months, with it being closer to the 9 to 12 month period of time. I think at the webinar from about 4 weeks ago, he showed certain economic characteristics that happened every time there was a recession, and we are staring down several of those factors right now. So put Dr. Mark Evans, emeritus professor from CSUB, in that group. Former Treasury Secretary under President Bill Clinton, Larry Summers, who's now, I believe, with Harvard University, he thinks a recession with a soft landing is unlikely. Another gentleman who I think I have a great deal of respect for, okay, I know I do, in his economic opinion, thinks that the recession is going to happen and not with so much of a soft landing. And recessions can be more significant than others. And unfortunately, Larry Summers thinks that a soft landing, a softer moving on, is not likely, as we saw. And, a perfect example of the soft landing is the COVID recession we had for 2 quarters, to where it snapped back after the first initial shutdowns starting in March of 2020. Investment banker Goldman Sachs says there's only a 1 in 3 chance of recession in the next 24 months. Whereas another investment banker, Deutsche Bank, is projecting a major recession in the coming months. And of course, Elon Musk, who had that famous 2013 appearance at the Doré Theater on the campus of California State University, Bakersfield, very moving experience, I might add, says we're already in a recession, and that will continue for another 1.5 years. So there's what people are saying about what is happening. And to back up Mr. Musk's point, we already have an economic downturn. Remember, a recession is defined as 2 successive quarters of economic decline, and we already had the first quarter in our Q1 of 2022. So, it's funny when you get out there and you look online, you can see there's one really kind of pet peeve that I have out there for talking about recession and surviving and maybe even prospering during a recession. And that is recession proofing your business. And I just do not like the phrase recession proof. I've heard geographic areas as large as the US, the state of California, parts of the San Joaquin Valley. I have heard so-called experts say that our region is recession proof. I was self-employed working with clients in Napa, California, and was in a restaurant there. Okay, I was in the bar section talking to the business owner in 2007, and he said, surely we're a worldwide destination. We're recession proof, right? And that was pretty much my answer, right? No, you're not. Recession proofing, I think it's better to take the approach of maybe recession survival strategies or surviving. Maybe you are one of those 1 in 5 businesses who do better during a recession. We saw that during the pandemic. 1 in 5 businesses did better in the pandemic. So what are some of the survival strategies that I would recommend right off the bat that I don't think you'll find many of these otherwhere, except perhaps that last bullet? And one is to, if you have that idle in place, if you have some of the other lingering monies that were left over from the pandemic relief programs, maybe you didn't spend down all of your PPP, your idle, some of the other local state programs, you have some of that money left. Obviously, that could be a nest egg that can carry you through an economic downturn. So, and again, it comes down to using those idle funds and using those other potentially economic downturn funds that you have, but you do need to document and you need to show how they are used. Again, you don't have to take that particular dollar for dollar out of the bank and to spend that program. For an idle, for example, it's a 30-month window where you can use for idle related expenses. We've gone over so many idle related expenses. Well, we've gone over them so many times, but again, it's going to be working capital, notes payable, debt, and other things that you can use. But also align those with the time frame that you have to utilize those funds in case you are audited somewhere down the road. One thing I don't see out there is building off some of the strategies that might have worked for your business during the COVID shutdown. I mean, cripe, we're just coming through one of the hardest economic times for small businesses in the history of small businesses. And now we're looking at staring down economic downturn. We're looking at potential recession, and we're looking at inflation that is off the chart. So look at some of the strategies that you employed maybe during the COVID shutdown that worked. We jumped ahead to talk about grow through a possible acquisition and look to grow your particular business. And one of the ways is through an acquisition, but there are other ways of growing. You can grow organically. You can grow in areas to where maybe you benefit from other small businesses that don't actually prepare or aren't as well positioned for the recession. And then, of course, the last one, the cash flow concerns, that's on everybody's list, really kind of working with cash flow purposes. And, one thing that we did share quite a bit during the recession was we shared a lot of our cash flow forecasting, and I do have the Excel spreadsheet that we will share with anybody who wants it. So here's the Excel spreadsheet that we have. And just kind of an example, here's the blank sheet, but our sample could be this one right here, and just kind of show you how it would work. Here's a fictitious business, of course, called Shea Buck from Bucksville, California, owned by Buck Henry, maybe the late Buck Henry. He was funny. And actually a lodging and resort is what this type of business is. As you'll see from the sales over here, where my cursor is going, very flat sales for resort and for hospitality type business. But we're doing this for example purposes. You have the money you start with at the beginning of the month. You add your cash sales, which gives you your total cash available for January, and then just estimate what your expenses are going to be. If you have other ways of looking at this. You have the profit and loss. You know what you can estimate your expenses so much better during a bad economic time period. Of what expenses are so much more easier to estimate, because if you're an existing business, you have a history. You have an idea of what your expenses are going to be. You have a profit and loss statement for the last year. You have a tax return that spells out your last 12 months. You can identify and you can judge what your expenses are very, 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 very closely. It's the sales that are going to be the hard part during economic turn down. So this business actually, even though most lodging don't do a lot of credit sales, they have some credit sales. Their credit terms are net 30. Fortunately, they don't have a lot. Really, some of the ways that small businesses get in trouble is they extend too much credit if they have a credit terms and they have credit policy to some of their customers who can get into business trouble. But this one only has a small amount of their overall sales, and you'll see their terms are net 30. So they make a credit sale here in April. Right there, they collect it in May. So what you'll see is you come down, you start, and here's really kind of your cash on hand, and it shows a trend of what's happening. And cash flow is favorable. It is increasing each month. It might not increase each month for your business. It could drop. You could have seasonality aspects of your business that will have, sharp increases and declines in your cash on hand. But it's a business by business basis, and we have this available for you, and we encourage you to look at this. And we even have advisors that can help you do this. So again, I think that the cash flow forecasting and getting prepared from a cash budgeting standpoint is so impactful and so helpful for your particular business. So moving right along, here was one of the ones that we found online, 27 strategies for recession-proofing your, oh no, please, not recession-proofing your business. I don't like that. But there are some good strategies in here, recession-proofing. Ow. So anyway, here there's some good things, and it all starts with a good cash flow plan. And also looking at your skills, and also you're competing with your competitors now. So it's really beating out your competition during an economic downturn. Some of your pre-planning has some good ideas in there as well. Ways to cut back. Definitely try to downsize your inventory. If you look at what's happening with your major retailers in the United States and maybe globally right now, is your Targets of the world and your Walmarts and a lot of your other Macy's, for example. If you're a consumer, you're in position to see some really nice sales, because what they did was they overspent and created too much inventory. And now they're going to go into a period of time to where they know, because of inflation, consumers are going to spend less. So if your small business can actually downsize your inventory and reduce your inventory, now is the time to do it. If you want to put your consumer hat on and buy a pair of sweats, they're going to be cheap the next few months. There are so much of the pandemic related goods and materials that were sold, a lot of your home improvements, a lot of we were locked in at home, so patio furniture, etc., big items. A lot of those are going to be available because your major retailers are overstocked. So if there's a chance for you to get out of some of that inventory that you had that maybe isn't selling as well, and maybe downsize your inventory, that is, I think, one of the major suggestions on here that I think is a great idea for preparing your business for an economic downturn. And this, of course, was courteous of Oracle NetSuite on a thing that they had on the internet not too long ago. So what are some of the other things? Really knowing your liquidity options and knowing how you can convert other assets to cash, that is important. If you have cash, you have the emergency fund set up, that's always good. If you've been able to pay down some of your debt and you don't have as much debt, always these pre-planning, and this is the phase that we're in now, really is something that you can really look into. So those are some of the strategies that you will see. Recession proofing, I don't think so. So we talk about 4 out of 5 businesses are likely going to feel a pinch if there is a recession. There are some industries that are usually more recession resistant than others. I'm not going to say they're recession proof, but they are in a line of work to where people will still spend, consumers will still spend money, businesses will still spend for various purposes. Obviously, for automobile repair, especially what's been going on with the supply of automobiles that has improved in the used car market and the new car market. But obviously, if we're looking to keep our costs down, we're looking to get by longer with the automobiles that we have. And also looking into repairing an older vehicle is probably more advantageous. A lot of people say, gee, nothing happens with food and beverage businesses. People are still going to eat. I hear this from restaurateurs all the time. Yes, they are going to still eat, but are they going to have the resources to spend as much? You're talking about an economic downturn. We're not talking about an economic catastrophe at this point. Economic downturn could result in your sales dropping 10 to 20%. My thinking is that food businesses are going to be impacted. Sure, people are still going to need to eat, but people are going to be looking at higher cost, and they've been looking at higher cost over the last several months. Whereas alcoholic beverages, people seem to spend more on alcoholic beverages during bad periods of time. So also some of the affordable home repairs are still going to be happening. Now, home improvements and some of the great improvements we saw in 2021 during the pandemic, not likely or less likely. So if you're selling your gazebo, if you have your gazebo selling business and you're thinking life's going to be great during a recession, maybe you focus on actually components that might need repair or might need improved on or enhanced or sold along with your particular gazebo rather than new gazebos. Affordable travel. People are still wanting to get out because of this pandemic, but they might be looking for more affordable or budget travel options. And so those types of businesses to where you have the opportunity to, provide a great experience for a less amount of money are going to still be in demand, as is healthcare. We still have to go to the doctor. We still have to survive. Household staples or another ones, things that we need around the house, quality brands, education. We're not going to throw the baby out with the bathwater. So baby care is going to stay on the forefront, even if it isn't this awful search that we have going on for parents that are trying to find formula for their babies. Financial services are an interesting one because a lot of people say that financial services are not impacted at all, that they are a recession-proof industry. And I don't tend to agree with that. I think on the financial side of things, still people will make prudent decisions on downsizing some of their financial products that they have, maybe getting by with less if they have less dollars as far as disposable income from a cutback in hours at work, from increased costs and other aspects. Utilities, we still are not going to call up, our electric company and say, hey, shut me off. I can't afford this. And other vices such as gambling and other things oftentimes do well when times are tougher. So lastly, could a recession be good for small business? And you see my options here. This is not a pop quiz. This is not a poll question. Could recession be good for small business? Definitely no. No, likely not. Okay, possibly. Okay, so let's look at it this way. Let's look at what have our 2 biggest headaches been as small business owners over the last year. That has been prices because of a variety of issues. Prices mostly because of supply chains, prices because of limited supply. And by the same token, the same thing with labor. So prices and labor have been our 2 biggest headaches for small businesses over the last year, maybe even a year and a half. So what would a slower economy mean for those 2 aspects, prices and labor? Well, it means number one, that with slower demand, we have a chance to even out this supply chain chaos we've been in. So supply chain chaos, oh boy, has that been fun? No, it hasn't. But oftentimes, if we buy less, and of course, the flip side of this is you might be the one selling those goods at this time, that it evens out this supply chain chaos. But a slower economy might mean we are getting back to an equilibrium in our supply chain. Less products for sale, stabilized prices could even fall. And we all know too much inflation is bad, but also people don't understand that too much deflation is bad if prices were to drop substantially. Obviously, that's probably the last thing that people are worrying about right now, but economists still think about that and they still direct policy based on that. So the puzzle for economic policymakers, they faced that for years. And then inflation, of course, is driven by wages. And so what's going to happen? It might actually provide more labor availability. If the job market tightens up, there are fewer job opportunities. There are fewer job opportunities. It could be good for small business. And we all know that corporations have been notorious over the years for using recessions to cut their payroll. And this couldn't happen during the pandemic because they'd look evil, they'd look bad, they'd look like they were abandoning ship. But now many have already started announcing layoffs or hiring freezes. So what does this mean? This means that there could be a lot of employees that are looking for work. A lot of people that are coming out of corporate America that might want to work in a small business and want some type of function in a small business. And that's handy when there are millions of small firms across the country that have been desperately looking to fill positions. Okay, so that's what we have right now. We're going to see if there's some questions, some Q&A. I took this all the way up to 1 o'clock. Next week, again, special guest, Melissa Forzat, and looking forward to really having her on. I know she's phenomenal. So really looking forward to that. Going to the Q&A box, what is meant by soft landing? And a soft landing on a recession is basically, it is not a hard recession. So the soft landing is, yes, you have a recession, but then rather than jumping off a 6th-floor building, you're jumping off a 1-floor building. So oftentimes with the soft landing is it makes it easier to get the economy back in the swing of things. So sure, we went through a bad period of time. We're transitioning back to good, whereas the alternative is something much worse. Okay, in our chat box, I see our producer, executive producer, Maureen Busher-Dang, has been at work with a lot of things. Boy, Maureen, you really outdid yourself this week. A lot of IRS information, a lot of things on the webinars that have the now timestamps in there. If you want to just jump in and see a quick topic, Mono County, Kern County, we got you covered. A lot of things on the crowdfunding. And let's see about questions. The Excel spreadsheet will be included on the on-demand e-blast this week that goes out. Sorry, I didn't get that up for you. You can blame that on me. If Maureen would have had it, it would have been in there. So I'll take the fall on that one. But look, we have a question in here, and we'll take this question and wrap it up. How does this affect real estate? I heard today that the California Mortgage Relief Program has expanded. They're now covering past due property taxes, higher income limits, and those that miss payments. And that resource is californiamortgagerelief.org. So how does it affect real estate in general? Well, that's a good question. A lot of people are saying they don't expect a bubble to actually burst in real estate, but I guess we'll see. That will be really kind of the next thing moving forward, is to see how with inflation and with we saw the bubble burst last recession, but now there's a problem with demand. Demand really hasn't subsidized, and supply really hasn't gone up. And thank you, Maureen, for putting in that California Mortgage Relief Program newsletter. So, okay, I think that wraps us up today. Thank you, everybody. Great to be here for webinar number 118. We'll be back next week and we'll be talking marketing. So, for Maureen Busherdang, our producer, I'm Kelly Bearden. We'll be back next week. See you then. Everybody have a great week. Bye-bye, everybody.